Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
What's rule number one? What's rule number one?
Party?
No, not party. No, it's not party.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Shawn, Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give all the loyal listeners of the Moving Iron Podcast a free Alliance branded baseball cap. So if you're interested in getting one of those, check out marketing at axontire.com and they will send you out a free one. So just go to marketing at axontire.com, give them your details, and they will send that to you. Make sure you tell them the Moving Iron Podcast sent you. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. For more information, call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, Ag Direct can help you finance it. You could even apply online at agdirect.com. Learn more about your financing options at agdirect.com. There for a minute, Ag Direct had a whole new product to help people buy their stuff. Shawn's with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on the podcast a couple times a week to talk about what's going on. Shawn has made it back from the great Northwest into that tropic warm weather of Florida that he longs for every time he leaves. So Shawn, how you doing, man?
I'm doing good. Glad to be home and, back into my, my style of climate. So
it is your style. That is for sure. Shawn, a lot of stuff going on here. Take a look around, see what's happening. We talk about last this last podcast we did on Tuesday, we talked quite a bit about, wheat, what we saw happening there. And, lo and behold, wheat market ran up, on Tuesday and Wednesday. And we're still looking at that, waiting for that last bit of information to come in to really kind of give that boost as to what's going to happen and what is happening with the wheat market. So a lot of stuff moving there. We talked about, corn and soybeans and what that looks like with the lack of planting happening in the corn belt. One thing we really haven't touched on much is what's going on with cotton. And cotton seems like right now in the United States anyway, it seems to be one of those crops that still has it's on pace. It means like conditions are pretty good in the deep south where cotton's grown. But if you bounce over to Australia, I was talking to a friend of mine over there, Tim Short over there this morning via email, and which is probably like 7 days ahead or whatever it is over there. They're having a lot of trouble right now with really, really wet conditions and getting crop out of the field that's harvested right now. So I guess talk about cotton a little bit and what you see happening and how those two dynamics are working with each other.
Well, one thing that's been plaguing corn and spring wheat's been the wet weather in the northern plains. One thing that's allowing the planting in cotton to do well is that it's been so dry in Texas. Now that's good to a point that you can make good planting progress, but at some point, you do need to get some moisture or else the planting,
it's all for naught, right?
It's all for naught. So,
Yep.
And that still continues to be a big supporter is that West Texas, 35-40% of production still not catching the rains. And, so now, you get in the ground and now it's, they got a window that the rains need to fall if they're going to actually produce something on that dry land. Now, in Australia, the current weather pattern has been extremely wet, and they have a good crop. But now it's a question of quality. What kind of, because the two things about cotton is how much are you going to have and how much of the good quality cotton are you going to have? Because there's a big differential between, your normal quality and high quality cotton. There's a big differential of what people are willing to pay. And so what's going on there now is they have a big crop, but now the quality is being reduced, and which means their revenue is being reduced because a lot of that cotton they're now going to be harvesting. Not that it's not usable, it's just not going to be usable to the same extent, which means they're going to get a lower price. And so that's really plaguing them right now. And I don't think that's going to go away. It looks to me like we still have a very wet pattern set in place for the next, 30 days to 60 days. I don't really see that pattern going away. And so what it means is they're going to have a lot of cotton, but they're going to have a lot less higher quality cotton than they were anticipating.
Okay. So right now, as you look at the cotton price right now, it's $1.45. I don't know. It's been a while. I don't know if I've ever seen it that high, to be honest with you, since I've been tracking commodity prices. So I guess talk about what's influencing that price right now. I mean, that's a really high price.
Well, a year ago, China, for whatever reason, decided they wanted to buy
Everything. Yep.
And they bought every bale of cotton and we have very good quality cotton here. And the working theory was that because they have low quality cotton over there, they need the high quality cotton from us to blend in to then make the cotton products and then ship back to us. And because of the labor laws there, where they let a bunch of underage children operate in very difficult conditions, and that the EU and the US decided that we're not going to buy cotton products from them that were made from child labor. They were also forced to buy more foreign cotton so that they could use that and then sell it back to us. So they went and bought all that cotton, took it off the market. And remember, last year we had a cool, wet South. It was cool and wet all season long. And, cotton is a hot crop. It likes hot weather. It was cool and wet, and the yields were down, and the quality was down. We talked about this late developing last year. And so that once again took more production off than was expected. And then of course, now this year, of course, with the drought in West Texas, it's adding more insult to injury. Then there's worries over India. There's been some pretty dramatic reductions in India's ending stocks due to a couple of bad years of weather, and they're starting. It looks like they're starting to restrict or put in some export taxes to keep cotton from leaving the country. And so you put all that together with inflation fears, and it's how you get your $1.40, $1.50 price, that we've been at. I don't think the demand's going to hold up, Casey. Everything I see, all the economic indicators that I see, says that economic activity across the board, across the world, is declining, which means people are going to buy less clothes than they did before. At some point, that's going to come back and bite the cotton market in the backside and cause a air pocket. But for right now, Mother Nature is still the number one priority. And we have yet to really fully trade that. Once we do, there could be considerable downside on the other, on the other side of this equation here. So,
okay. All right, let's jump over and talk about what's going on in the natural gas market. Natural gas is still on the rise. Obviously, not tensions anymore. Ukraine and Russia, the situation we see there, that's a lot of European countries stepped away from Russia and say, hey, we're not gonna do that. We're gonna try to find our natural gas from other places. You got all kinds of things going on there. Plus, throw fertilizer on top of that, and natural gas prices are very high right now. So I guess as you look at that, and you've had these different predictions that you see out there for natural gas, what's your thoughts there? And are you still on that same path?
Well, as you know, a year ago, we predicted that we thought natural gas would trade over $7 by April. It was a function of these escalating LNG exports. Plus, we thought we were going to have a very late ending winter that would create a lot of extra demand, and it would draw down the storage stocks to levels that would worry the market. And we saw that. We actually saw the market go almost 9, just shy of 9 before having this kind of correction here. And what we're worried about, Casey, is we're not getting production growth right now like we would expect or have expected to see in the past, meaning that the rate of growth of U.S. production is slow. It's actually down in the last 30 days. If you can believe that with these high prices. So the lack of investment, the disinvestment, the fossil fuel are all bad people and we have to put them all out of business. That whole mantra is put the situation where it doesn't look like they can turn the spigot on right away. And the market's looking at where we are with storage stocks. How much are we going to be able to build come the fall? And this large continued increase in LNG exports overseas. And the market's worried. They're trying to give even a greater signal to the producers. Hey, go put that money to work. Go drill that well. I know we told you a year ago, we don't want you, but now we do. But it's not a snap your fingers thing. I think we need to go through another cycle of high prices before we're going to see that happen. And so that means we're very vulnerable going into the fall. And I still think there's a possibility that natural gas prices, especially if we have an early start or some early cold weather, or colder fall than normal, which I'm expecting we will see, we can have prices make new highs based upon that scenario. And so, I would view a correction now that's typical as we move into the early summer, as a pause on a way to much higher prices still. So
Okay. So yesterday, I've been reading, you read a million reports a day about, food prices and increasing food destabilization, and a lot of it points back to what's going on in Russia and Ukraine and getting stuff out of the Black Sea. Zelensky yesterday talked about how, they need to be able to get their crop out of the Black Sea and, tell Russia to back off so we can do that, because they had whatever it was, $8.4 billion worth of wheat they could push out and those kind of things. In your opinion, Shawn, we've talked about this before, looking at the rice situation and the wheat situation, we've talked about that. I guess looking at what's going on right now, how do you expect to see this this food destabilization, this food supply chain thing, until Russia and Ukraine are done having a war? It's going to be hard to get that amount of food pushed around the world that people can actually get what they need. I mean, is that a fair statement?
Well, if you think what this is forcing, it's forcing everybody else to figure, how can we grow more wheat? How can we make up the difference?
Right.
And they will make up the difference, not right away. But the problem I see longer term, Casey, is that, so let's say this thing goes on for another year, and it's whatever, it's just we stay in this state of where we're just not going to get a lot of stuff out of Ukraine. Okay. Well, everyone else is going to have these high prices. Everyone else is going to start figuring out how to do it. And then the next crop cycle after this one, we could have huge production growth in wheat outside of Ukraine. And then whenever they do finally decide it's time to, come together and hand in hand, heart to heart, and they're able to get stuff out of there, and Ukraine gets back online, and of course they're going to get back to producing a ton of wheat, we could have quite a glut. If you're looking further out.
Right.
So I actually look at a situation where what is super bullish now, for let's say for the next year, could be incredibly bearish 2 years from now, because now you're not going to tell the rest of the world that just fired up new production to go back and take it back off. It doesn't work that way. Once you put it in, you're going to keep doing it. And so we may be creating a monster here of wheat production from which it will be very hard to come out of for a while. That's the longer term thing I think about, is what does all this mean? It just means too many people growing wheat on top of the number of people that were already growing it. And we could have an extended period of just too much wheat for a while, but that's not today. That's not a quarter from now. We still have a lot of problems ahead, but that's the other side of this equation. When eventually, I don't believe Ukraine production will be offline forever. I do not believe that. At some point, whatever happens will happen, and whoever's controlling it will control it, but that supply will come back online.
All right. Yeah. So they've got a lot of issues there that have to get figured out. Because that was my very next question, is, so what happens when the rest of the world jumps in and says, all right, we're going to totally retrofit our infrastructure, and we're going to grow more wheat than so we can offset this stuff for our needs. And then, but you still have countries like Egypt and those places like that where growing wheat is going to be an issue, but they're still going to be heavily dependent upon the amount of exports they can get or imports they can get. So right now,
remember, as we're moving away from La Nina, and we're going to move into more of an El Nino pattern in 23, 24, that tends to produce big wheat crops.
Right.
And so on top of having more people growing wheat, putting infrastructure in, putting investment dollars in, now you're going to have some really, really good weather.
Yep.
And so, yeah, I mean, we could be looking at a big, I'm not saying it's bad for humanity, but in terms of the producer, we could be looking at a situation where many of those people that just came into the wheat market may be underwater very, very quickly, because they're coming in at a high price. The guys that have been always growing wheat, that they have a certain, long-term buy-in that's different than somebody coming in brand new and paying all these high prices. Now, all that new production could be underwater in a hurry. So it's a dangerous game for those that are going to, no pun intended, play Russian roulette with putting new production in. So,
all right, I like your pun there. That was good. All right, let's take a look at what's going on over in the cash or over in the cattle and hog markets. We saw some big demand, and now we've seen some tightening of that demand from the packers. I guess as you look at the cattle market, Shawn, as we head into this peak grilling season, and we're going to grill, $22 steaks. I mean, what are your thoughts there?
Well, obviously the China lockdowns don't help demand
Right.
for pork, demand for beef, demand for chicken. It's not good in the short run. Now the flip side of that, like we talked last time, that when they reopen, it's going to be an enormous amount of demand. So we're sort of in this little bit of an air pocket here. And I don't care who you are, but you go to the store, you go to a restaurant, and you start looking at what you're paying for steak. Even those that can still afford it, you're going, maybe not. I mean, there's just starting to get to a level where even the people that have the means are just saying, maybe I'm not going to do that right now. And so, grilling season and burgers, I mean, I still think that's going to happen. But, look, there's some demand issues that are going to be showing up here in the near run. And I think that's one of the drivers why cattle prices and hog prices have been getting hit pretty hard. Now, of course, on top of that, you have this crazy high corn price that's making it unprofitable. And so they're liquidating the herd. You have this ongoing drought out west, no hay, no alfalfa. It's just the final phase. You have all these animals that are going to continue to come to the market at a time demand is going to start pulling back. It's a setup for a tough period here for the next couple of months. Now, if I'm correct about the feed price coming down substantially, and I'm correct about China coming back online, the demand will start to surge later in the summer and the fall, and the economics of growing animals will start to improve. Herd liquidation stops, and then we're sitting with very few animals historically to come to the market. And then if prices start to go up based upon that, like they typically do, and they become super profitable, then they're going to start retaining animals for herd growth, which means even less animals are coming to the market. So I kind of view it that we're in this final liquidation phase in the livestock sector that's going to lead to a typical post bull market, grain market rally 2 years after. That's how the herd liquidation, herd rebuilding cycle works. 11, 12 versus 13, 14, grains went up, then the livestock went up. And that's where I think we are, is we're in this final bottoming phase to set up in late 2023, 22 into, early 2024, big move in the livestock sector. So I guess what I'm trying to say is tough sledding for a few more months, but I do think some really profitable times are coming for producers if they're able to, get through this rough patch. So,
right on. Okay. All right, man. Well, Shawn, good stuff as usual. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there to let people see what we do and if we could be of value to your listeners.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything related to the Moving Iron Podcast. You can find the information there for the Moving Iron Summit coming up in September 6th, 7th, and 8th in Nashville, Tennessee. If you're interested in coming to that, any dealer, it doesn't matter who you are, come check it out. Well worth your time. Shawn's going to be there, and he's been giving his little rundown of what he sees happening for 23. Check me out on LinkedIn as well on the Moving Iron Podcast. And if you want to really see what Shawn looks like, check him out over on the YouTube channel. That's the Moving Iron Podcast YouTube channel. You can do that there and go there, subscribe, and like they always say, smash the like button. So that's what my kids always say.
And remember, Casey, everyone has to remember the alphabet because we're going to be talking about PDO, AMO, IOD.
Yep.
And so we're going to be throwing all TSA, we're throwing all kinds of stuff out there. So just be ready.
Yeah, it's he has a decoder ring that you can bring that he has when he starts this thing, and you can turn that thing around and he starts talking, and you know exactly what he's saying. So it'll be great. No, it's a good wealth of information. A lot of good information there, and so I'm looking forward to that, Shawn. With that, Shawn, I guess talk a little bit about what you see happening this going from 23 to 24 briefly here, or 22 to 23. I'm sorry.
Big pattern change. Going to El Nino pattern, much wetter, cooler weather for North America, South America, much bigger production for grains, rebuilding inventories for grains, kind of putting the food scarcity worry for temporarily back in the bottle. But drought problems in Africa, drought problems in India, drought problems in Asia. So you're shifting the risk over to there. And the problem with that is where people tend to have more shortages of food on a regular basis, that's where the problems of the weather are going to be. So things like rice in places that desperately need good production are going to come up short. And so the humanitarian crisis overseas actually is worse during El Nino, even though prices for a lot of ag markets come down because we grow more of it. It doesn't mean they have more of it over there. And so, so that's the kind of thing that's going to be a big shift. And Australia, we talked about Australia earlier, that have been dealing with a lot of wet weather for the last several months. They're going to go into drought. Yeah. And that means a very big change in their prolific production they've seen. And the producers there need to be ready. So,
okay. Well, just listen to the Moving Iron Podcast, and Shawn will tell you, we'll direct you down that path. So check that out. All right, Shawn. Well, with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out. Axon Tire is going to have more tips, tricks, and client advice throughout the year, and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving